Good afternoon, guys. Welcome. It's Sunday, August 1st. My name is Dave Coker, and this is Talking About Finance. As we're going to do, again, like we did last week, we're going to start out by just taking a brief review of the equity markets. This was requested by a couple people, and I think it's okay. So we're looking at the S&P 500 over the past month in this slide, and we've had a pretty good month. The S&P 500 is up about 2.27% in aggregate. It's a nice little run. There's a little dip on July 19th. Remember, we were down almost, well, 0.8% actually. And retail seemed to have rushed in and bought very heavily. I certainly was buying pretty heavily around the dip. I mentioned before that I'm recently have been more active in the stock market over the past few months than I have been in years. Other sectors, Russell 2000 down about 3.1%. That's an index of small cap stocks. MSCI emerging markets down about 5.5%. MSCI All World Equities, it reflects global stock market performance, up 1.5%. And gold up some 3.2%. And someone asked, I mentioned about my asset allocation, about a month ago, and someone asked about my retirement money again. Yes, I've been buying more gold. It's nothing too serious, 5 or 6 ounces a week from dividend cash flow. The last time I presented this chart, roughly a month ago, I was at 58% bullion in my retirement account, and the rest was cash. So I'm doing this because, well, first of all, I went long gold and silver March of 2019, as I've mentioned before, put on fairly large positions in both. And I've been getting nervous as this COVID thing's been developing, not only about inflation, but the stock market valuation in general I think it's irrational, some of the stuff I see going on. So yeah, gold is a good play. And do you have gold, guys? Really? Of course, Keynes famously called it a barbarous relic. But this is interesting. If we look at free cash flow from various market sectors, and if we subtract CPI, inflation effectively, we can see only gold and silver miners in aggregate, that sector, is generating cash above the rate of inflation. It's a great chart. I know the guy who did it. Lots of work went into it. So it's a very fascinating thing. Depending upon where you're putting your money, you'll see, no matter what's going on with share prices and stuff, that the sector as a whole, only mining, gold and silver miners, are generating cash flow above the rate of inflation. Now remember, guys, bullion's good for lots of reasons. Inflation is one. And you may, but I don't buy into all that transitory talk. They're trying to talk down inflation fears and saying that it's only transitory. Well, you can transition to a higher price level, and then inflation could cool down. We've seen this historically happen many, many times. So we do know prices are going to go higher because when we look at the data, guys, we got lots of examples out of it in spite of what the Fed says in these press conferences. So we know we're going to see higher prices. What we mean by that, of course, is inflation. Just look at shipping costs. This is an interesting metric. I love to look at these anecdotal indicators that a lot of people don't look at. This is how much it costs to rent a container, a 40-foot box, and you can see that we've seen huge price increase of over 100%, for gosh sakes. Most of that, and that's just since May, most of that, guys, is going to be passed on to consumers. Businesses don't have the margin. They cannot absorb such a huge change in their cost structure and maintain present prices. So we're going to see this. So I think, yeah, gold's a good place to try to get some protection from the price increases. Are there any other vehicles? Well, sometimes people pitch Bitcoin as a protection from inflation. Now, I certainly don't. And if you watch my cryptocurrency videos, you'll know about the halving. And what we've got here, this is off Plan B. Really, really good guy. Check out his website for more details. The URL is in there, planbtc.com. But in any case, when you watched my cryptocurrency videos, you'll know about the halving. If you don't know about it, it's fine. I can explain it in 30 seconds. You'll be an expert. So we know that new Bitcoin is mined, and it's mined every 10 minutes, 24/7 around the clock. Every 10 minutes, new Bitcoin is created. But every 4 years, the production rate is halved, and this is what we call the halving. It sounds like a horror film, doesn't it? Yeah, it's actually pretty good, but it's only horrible if you're not holding Bitcoin, guys, because prices rise after the halving. And this makes perfect sense. Why? Well, think about these factors, right? We know adoption is increasing without a doubt. Once again, if you go on my blog, FinTech Flash News, you can see we've talked about PayPal. offering to US investors the ability to buy cryptocurrencies. Bitcoin's in there, Ether's in there. I'm not sure what else is in there, but it doesn't matter. So you can buy Bitcoin on PayPal. And furthermore, you can use it to pay for purchases. That is some interesting stuff. So adoption's definitely increasing. Interest from institutional money is increasing. So effectively, the demand is increasing even as the rate of reduction is halved every 4 years. Now, what he's done here is he's taken the price trajectories of each halving. And you can see they're sort of similar if you look at the first two, the 2016 and 2020 halving. So it's highly likely we'll see something similar with the halving that took place on May 24th of 2020. It'll be interesting. Who knows, really? Nobody really knows. As Will Rogers famously said, all predictions are wrong. But again, if you go on my blog, FinTech Flash News, you can read JP Morgan's and Bank of New York, Mellon, their forecasts for 2021. I won't repeat them here, but they're both in the six-figure range. Not substantially, not at 500,000. Kathy Wood from ARK suggests it'll be 500,000. I don't have a view about the level. I just know that Bitcoin is likely to go much higher. And that's why I tend to just buy and hold. And as I've shared with you guys, I'm back on the Bitcoin again, buying every Friday now. So Bitcoin's another place to dump some capital. As I suggested, don't try to trade it. Just buy it and hold on to it. Well, why do you want to trade? You might time it wrong, and who knows what's going to go on. If we see further drops in the equity market, we'll likely see more money coming into crypto. We know, I should say, that because of the drop in July, a lot of money did flow into crypto. And once again, increased demand chasing a relatively static supply every 10 minutes is when the Bitcoin's created. Yeah, supply and demand, price goes up. It just does. So if there's another problem with the stock market, we might see a huge rush of capital in. Otherwise, it'll just be people like me and hopefully you guys buying Bitcoin regularly, dollar cost averaging, accept no substitutes. So in any case, stocks are attractive. And now this is not my chart. It was on FinTwit, and it's actually pretty interesting. The author suggests the Fed will never let the stock market crash permanently for too long. Now, I do know that the government meddles with the stock market a great deal. We've got the plunge protection team. And if you're not aware of them, just Google them up and you can find them. They were very secretive. And we saw some stuff, some references to it in some Fed documents, oh God, in the early 90s. And people started tracking. And we know that the plunge protection team was formed after the stock market crash in 87. And what they do is they buy the dip, but they do it with the power of a federal agency behind them. So they're not just buying, $100, $100,000. I don't know exact numbers about what they're up to. So I don't know. They mess around with the market already. I don't know about this chart. It's an interesting one, but correlation doesn't really prove causality. I tend to agree that we're going to see share prices, going up at least for another 12 months or so, I would estimate. I think we'll likely see some problems about 18 months out. I might get the time wrong. But yeah, they've gone up too far too fast, and a lot of stupid money in the markets now. Now, as I mentioned, guys, I don't include myself in that category, by the way. But as I mentioned, I have been very, very active buying stocks. Not selling. I never sell. I just buy. And I do that from dividend income. And I only hold dividend-paying stocks. So I'm really insensitive. I don't really care, I should say, about the price level. All I want is yield. All I want is my money every month. And sometimes people point out that dividends can be cut. Yeah, I know that. But the simple fact is a company has far more control over its dividend than it does its share price. They set the dividend, for God's sakes. So they tell you what the dividend is going to be. And some of the companies that I invest in, they declare dividends 3 months out. I try to buy monthly pairs. Some of these companies that I've invested in, they declare the dividends 3 months out. One that I own just pushed the dividend or announced the dividends all the way to the end of the year. My God, and it's about a 13% yield. So it's a wonderful thing. At the end of the day, guys, though, I like bullion. I like stocks. I like lots of different investments. At the end of the day, it's all about money, investing and holding on and things like that. And really what you want to do is you want to take a look at where money's going. And this is a wonderful chart from Bloomberg, actually. And we know that money's going into equity exchange traded funds. They've taken in a record amount. It's really amazing. And this is already for 2021. It's as of June. It's not even the entire year. We've already taken in more than any other year. So all that money flowing into ETFs definitely will help drive share prices up. It's yeah, as I said, we're going to see continued increases in share prices for a while. It really calls into question though who's actually buying these stocks. And this is a nice little chart going from 65 up to the present, and they're taking a look at actually who buys stocks, who owns stocks. Really interesting, guys. Now take a look at the left-hand side. The bottom part, the gray one, that represents retail money, taxable accounts, and also we've got IRAs in there, but we won't talk about those so much now. The thing I find striking about this is that retail money, ownership of stocks at least, has been falling since 65. You can see, you go back to 65, roughly 80% of Americans own stocks. Now we're down into the 30% category. And sadly, those are fairly wealthy people who are buying the most stocks. It's not really appropriate in my view because the stock market is the single best way that you can get rich. Short of robbing a bank, it really is. It's you just buy stocks and sit back and let time do its thing. That's what you got to do. Now, the other thing I wanted to call to your attention was at the top. I have no idea what that color is. It looks red. We'll just call it red. But if you look at red, what we've got foreigners buying stocks. Now, this, I've spoken about this before, about these chronic trade deficits. And you look at this, foreigners are rapidly expanding their holdings of U.S. stocks. So they sell us the products, we willingly buy them, they get the dollars in return. And some of these people, I'm looking at you, China, very smart with money. My God, maximum respect when it comes to money. And yes, they're buying U.S. stocks. It's really, really wild. I'm hoping we're going to see a change in the behavior of retail investors. It's not really for want of money. We know that investors are sitting on record amounts of cash. It's well over $1 trillion. They might have reduced their outgoings, and that helped them pile up cash as well. So they've been working from home and they've reduced their outgoings. And this is an interesting one. Oh, poor Boris, right? What we got here is we got a chart showing about attendance into the office. So even though a lot of firms are trying to get people back in the office, we can see attendance is still down roughly 50%. It's absolutely amazing. Lots of people simply are refusing to commute again. It's UK specific. It's the same stuff's going on in the States. So we can actually see the data in the States through Apple Mobility and through TomTom's data. So it shows a lot of people who have been able to work remotely just are not going to commute anymore. And that's attractive for many reasons. Now, when I teach at university on campus, I tend to, even though it takes me 40 minutes door to door, got a wonderful commute, and I could do it quicker, but I'm sort of lazy in the sense that I want to get on this certain train, and I sit down and just read books the whole way. I could do it quicker if I was willing to change trains twice, but I ain't gonna do that. Just too lazy, right? But in any case, for me, I would leave when I was teaching on campus. I would leave 2 hours early because if something weird happens, I want to make sure I'm there. At Deutsche Bank, we had an expression, on time is late, 15 minutes early is on time. I am always on time for my classes. I'm there before class starts, and then I can pester people that come in late. Much younger than me. What are you doing, right? So in any case, guys, I gained, from my point of view, when we went to remote teaching at the university I worked for, I gained, I should say, another 4 hours a day. And I put it to good use. I acquired a bunch of skills, did a whole bunch of really cool stuff that we won't talk about so much here. But in any case, I've got 4 more hours that I've gained. Now we're going back to campus, and that's okay by me, to be honest, guys. I think I know I'm more effective with students face to face. So instead of just blagging and shouting at them remotely, I can get right up to them and really give it. No, I just like to move around a lot, and I don't really like what's going on with this remote teaching. It's not that effective for the students. And I just don't care for it that much compared to being in a room with students and getting the feel of the room and working that way. So I'm looking forward to going back to campus, but I do know an awful lot of people. In fact, all my friends that I chat with regularly and I present slides, a lot of these come from my friends that we've been talking about. Yeah, they're not going back. And I think three of them are still in banking. I'm trying to think of the others, what they're up to. They're just not going back. They're going to work from home. One young lady that I know quite well, she actually gave notice because the bank she's working for said everyone's back, and she said thank you, no thank you, thanks for the job, bye. And she actually got something for another bank. You guessed it, working from home. So you want to start to think about this and what it's going to do to property in particular, even businesses that are dependent upon people commuting into city centers to work. I already know, because as you know, I've got a fairly large property business, and I already know commercial property. My God, I've never seen so much for sale so cheap. It's the most amazing thing. I did before the pandemic. I did want to get into commercial, and I learned a great deal about it, and took a couple courses through my landlord group, NRLA. But the point is, I wouldn't go anywhere near it now, even though it's very, very attractive. There's just too many unknowns. Will there be another mutation, another type of COVID? Who knows what's going to happen? So try to think what's going to happen with property prices, guys. Try to think what's going to happen with the businesses. This is how you can make money in the markets. It's all about thinking ahead. And that's why we talk about this stuff every week. We sort of look about where we are and what might be going on in the markets. All right, guys, that's it for today. I hope you have a really wonderful, a very safe, a very productive week coming up. Once again, we've got a holiday in the UK, and we're going to see an awful lot of activity in the markets this week. And keep your eye on Bitcoin, because we're going to see that tending to move. Oh, let me ask Alexa, what's the price of Bitcoin?
One Bitcoin is worth 41,500 US dollars, down less than 1% over the last 24 hours.
It's the first thing I ask Alexa in the morning, the last thing I ask her at night. I can sleep well. All right, guys, take care. Have a great week.